Welcome back, everyone. Let us do a quick recap of whatever you have learned so far by answering the following questions. What do you understand by savings? Is it to keep some money aside from the money in hand, or is it to spend all the money by the end of the month? That's right. Savings means keeping some money aside from the money in hand. What is a better option for taking a loan? Is it by going to a moneylender or is it going to a bank? Yes, it is always better to take a loan from the bank. What is a secured loan? Is it the loan that requires some type of collateral as a condition for borrowing money, or is it the loan against the money that is locked in a box? That's correct. When you provide a collateral for an asset against the money borrowed, it means that the loan will be repaid to the bank and hence is a secured loan. What is the use of budgeting? Does budgeting refer to spending money carefully, keeping all expenses in mind in order to save money? Or does budgeting refer to spending money as planned? You got it. Budgeting is useful since it helps us spend money carefully, keeping all expenses in mind in order to save money. Let us do another exercise. Can you share some keywords with me from all that we have learned so far? Bank, income, expenditure, KYC, savings, budgeting, FD, RD, ATM, checks, account, withdrawal slip, deposit slip, car loan, mortgage loan, personal loan, borrower. Well done. You seem to remember most of the key concepts discussed so far. Today, we will learn the importance of financial planning. What does financial planning mean? In our life, we will get ample opportunities to earn, but we should not get complacent with our income. Rather, we must learn how to secure our future with whatever we earn. The aim is to live within our means so that we live a decent life and at the same time we manage to save for our future. This is possible through financial planning. With proper financial planning, it becomes easier to meet our goals. We will also learn about the different financial instruments that can be used for planned savings. Financial planning should begin by answering 3 questions. Where am I now? Where do I want to go? How do I get from here to there? To plan finances wisely, the most important step is goal setting. We can divide our goals as short-term, medium-term, and long-term goals. For example, you can take a short-term goal to complete your studies so that you can start working and build a career. Your medium-term goal can be to help your parents build a house, so you start saving for the same early in your career. Your long-term goal can be leading a comfortable life after retirement. SMART goals. To meet each of these goals, you need a detailed plan. These financial goals need to be SMART. Let us understand what we mean by SMART. For example, you want to buy a refrigerator for your home which costs 22,000 rupees. Instead of thinking on the lines, when I save enough money in future, I would like to buy a fridge for my home. You should plan it like, after 10 months from now, I will buy a 300-liter refrigerator that costs 22,000 rupees. Let us now break this down as a SMART goal. Here, SMART goal refers to specific, that is, you know exactly what you are saving for. Measurable, you know how much money you will need. Achievable and realistic, you can break the total amount needed into smaller steps, say saving 2200 rupees a month. And time bound, you have set a deadline for 10 months to save the amount. In short, financial planning refers to all such short-term, medium-term, and long-term goals, where all goals need to be SMART goals. Planning for the future. Let us now find out where we can keep our money so that it is not only secure but also gives us good returns. This will not make us uncomfortable even if we have to make a big expense, planned or unplanned. Before that, you must remember, as a student, your most important goal is to focus on the completion of your school and going for higher education so that you are ready to have a career of your choice. The government provides a lot of support towards this. In West Bengal, unmarried girls passing class 12 are entitled to a one-time financial help of 25,000 rupees for continuing their education. This is under the Kanyashri Prakalpa. Similarly, in Bihar, any unmarried girl after passing class 12 and enrolling for further education gets a financial grant of 25,000 rupees. This is received under the Mukhyamantri Kanya Utthan Yojana. Other scholarships like Vivekananda Scholarship, Nabanno Scholarship are available for eligible students. These can be availed in West Bengal. Similarly, scholarships are also available in Bihar. These can be availed by applying online, which means students need to plan their career path from before and start planning for their scholarships. Opening a bank account and saving money in various schemes offered by the banks are important. These savings can be later utilized for pursuing a career. When planning funds for the future, it is very important to keep our savings in diversified savings instruments. Let us understand more about diversified savings instruments. You know that we need to keep our money safe and also generate revenue from the same, so that when we are unable to work, we can still live comfortably. So far, you have seen that we can keep our money safe and make it grow through different financial instruments such as savings bank account, a fixed deposit, and a recurring deposit. The money in a savings bank account is liquidity. In other words, it is the readily available cash that can be used during an emergency. The money in FD and RD earns interest and can be withdrawn from the bank during an emergency. But in such a case, there will be a loss of interest due to premature withdrawal of money. Another very popular instrument of savings, especially in an emergency like an accident or illness or even death, is life insurance. Life insurance is a secure financial arrangement for your dependents. It provides financial security for your family and all those who depend on you. The money you pay to the insurance company is called premium. Premiums can be paid monthly, quarterly, half-yearly or annually. After a set time period, say 15 or 20 years, you will get back the amount paid with a bonus amount. This is the sum assured amount as mentioned in the policy. In case of an untimely death, the nominee of the insurance holder will be paid the sum assured. You should talk to your parents about securing a life insurance policy so that in case of an adverse situation, the family doesn't suffer and has some money to bank on. Features of a life insurance. It is a written contract, also known as a policy between a person and an insurance providing company. The person has to name a family member as a nominee in the contract. The person provides a periodic payment to the company, and the company in return provides financial security to the person or their nominee in case of an emergency. Within the policy, a sum of money is promised or assured that will be given to the person or their family. This amount is the entire premium paid by the person along with a bonus. In case of an untimely death, the nominee will be paid the assured amount. While a life insurance helps the family to stay afloat, in case of demise of the policyholder, a medical insurance comes handy in case of a medical emergency. A medical insurance policy covers various types of medical expenses that may arise due to an illness or an accident of the policyholder. It covers expenses such as hospitalization, medicines, diagnostics, doctor consultations, and so on. We shall learn more about insurance in detail in one of the coming modules.